I feel I have a basic understanding of how to trade crypto. I watched our beginner's guide video, learn the basics, now make me an expert. Teach me strategy for crypto trading. Today I sit down with trading expert Evan Aldo. So right now in the market as we film, is it more ready for a long position or short position? What are these metrics telling you right now? As he teaches me advanced crypto trading strategies on my journey to become an expert trader.
I'll show you on the Bybit account. Let's enter this potential trade right here. So
be sure to watch our Trading for Beginners original video linked below where we review the basics.
The most important thing with leverage is you want your liquidation point. You don't want to get liquidated.
And because we go over advanced trading strategies today, do not be afraid to pause the video throughout and take notes.
So watch this slowly, pause it, and try to find the places I looked at.
Join me on Bybit now with referral code Altcoin Daily and grab a $20 sign-up bonus immediately and earn up to $30,000 in deposit bonuses. Link down below, follow along.
And actually the exchange is paying us a little bit to keep this trading because we have a negative funding rate.
Click the like button to support me and let's start.
Yeah, now that you're learn this kind of the swing trading where there's opportunities that may only come up sometimes once a week or every few days. Now you want more, you want to always be in a trade. So I like it. Now we're going to go into some intraday trading. Intraday, for those who don't know, it's like, could be a day trade depending on how the market works, could last a few days. And then we'll go into kind of the scalp trades where a lot of people, you don't have to use real high leverage, but it's more advantageous to do so in those type of positions. So I'm going to go ahead and share my screen and we'll get up the chart right here, and you should be able to see it, right?
Yes.
Perfect.
What is it? What is a scalp?
So a scalp is basically a trade that you keep in from anywhere to, it depends on how the market moves. Like sometimes you could put in a scalp and 10 minutes later, 3 minutes later, you have an outcome. Sometimes it could take 2 days, for example. Like I'll give you an example of a scalp long that, this was a scalp, I wrote scalp/day long because it actually took 2 days to play out on Solana right here. And this was the trade setup. I took this trade, and this was mainly based off of this bullish divergence here on the 15-minute. You had your momentum waves coming up, and you also want to see you don't have to have this, but it's better when you have this. You're seeing money flow coming up right here. And so as price is coming down, and we reclaim that level. So I entered a trade approximately around this area. Really good risk-reward ratio, but look at this. This took a while to play out. This did not hit first take profit until this morning. So I was in it a few days. Some people in this position, they would, kind of maybe when you're up here, they'd get bored and just take profits. You can do that, lock in, profits early for that. But I waited, and it proved to be advantageous. It finally hit the first take profit about 151. Really good risk reward ratio, about a 3-to-1 right there. I think actually I did. Yeah, it was a little bit. Let me turn off my magnet tool right there. It was a little bit better. Yeah, a little bit around a 3-to-1. So really good risk reward ratio right there. So
is it accurate when I'm just like I'm now understanding more the trader's mindset from our first beginner's guide video to this one. And how you make a trade is, if one metric lines up for the positive, that's good. But if you're starting to see 3 or 4 metrics show, bullish momentum or in the positive, that's when you feel more confident to make the trade, and that's when you implement.
Exactly. And a common mistake I see people make is what they'll be doing for a while is they'll be doing everything right. They'll be looking at 3 or 4 different metrics. They'll be winning 5, 10 trades. They'll have they'll be winning, they'll be a profitable trader for a few weeks or something. And then they'll get agitated because they want to make more. So they'll start risking, instead of maybe $100 or $200 for a trade, they'll start risking 500, and they'll stop doing the smart things they were doing. They'll stop looking at the 3 or 4 metrics and just look at one thing that looks kind of good, and then they'll blow out all the wins they had for the first 2 weeks. So I wanted to mention that. That's a common mistake. That's one of the most common things I see people do when they first, start to get the hang of it. So yeah, always. And when you get nervous too, when you're some money on the line, you get nervous, you tend to overlook things. That's what I noticed too. Another thing for the people watching, really keep that in mind. So yeah.
Money management, much like playing poker, much like any business, really.
It's exactly like being a professional poker player, professional blackjack player, but I think you have more of an edge in trading. There's more available to you, much more of an edge rather than just counting cards or, in poker, it's obviously a psychological aspect, trying to bluff people, which is, I've tried to do that in the past and failed miserably. Maybe I just need to spend 3 years trying to do it like I've done with trading, but yeah.
Listen, you can't be good at everything. You're a trader.
Sure. Exactly. So to kind of get into, I'll show you this, what's simpler first, kind of the day. We showed a little bit of the scalp. We'll get back into that, but let's look at some like a day entry that was pretty simple to get into on Bitcoin. So
And teach me how you knew how to get into it.
so yeah, the time frames we want to look at. So in our previous video, we looked at higher time frames like the 2-day to the weekly, and then we looked at middle time frames like the 3-hour to the 8-hour to enter. For just the day trading and intraday trading, we're going to be looking at between the daily to the 90-minute. Those are really good places to look at. So first, what we're looking at. So say we're climbing the wall of worry right here. We're all scared. Price came down a ton, and we're trying to get in the long, but we don't know if we should. We're a little scared. But what we're looking at here is basic market cipher strategy on our 90-minute. This looks really good, and we have our trigger wave right here. We also had our money flow crossover a little bit right here in the green, which if you look at this would obviously have not been a bad place to enter. You probably would have been fine. It would have been the same place right here if you entered. I like to enter either on the trigger wave or, money flow crossover right there. And in addition, when we look at this, let me just draw just so we know exactly where we entered this right there. We look at some of these middle time frames here, like the 6-hour getting trigger waves. You're seeing good things like our metrics that we were talking about. Money flow is coming up right here. And the daily is a really important time frame to look at, because I like to have two main time frames that I look at, and it's 1/15 or 1/16 I find the best. So 1/16 of the daily is the 90-minute. So when we look at the daily here, remember what we were talking about in our previous video. The VWAP is coming up. That's good. And we even have money flow. You could see how money flow, if you zoom in here, starts to curve up a little bit. That's what we want to see right there. That's really good. And that's what we're looking at right there. So we are in a bullish momentum. And we're holding this. I mean, you don't need to know this to enter this trade, but we're holding. We shot up with the wick, which is really good. And we're holding this big area, which is around 54. And we're breaking above the spider line here at 56, which is good as well. So we're going to look at our 90-minute, and we're going to go back to where we were. And we're going to see we got a trigger wave there. So this is really good. Now, this is only half of the battle. We need to know, where to set our stop loss and our take profit, because that's the most important thing here. So let's say we got in at the confirmation of this green dot. This green dot confirms the time. If this is printing right now, it would take an hour and 20 minutes to confirm, just to show people. You don't have to wait till it confirms, but there's usually a little bit more confluence if it does confirm. I like to wait till it gets close, at least, if it's on a 90-minute candle, at least like 15 minutes before it's going to close. Usually nothing too crazy happens in that amount of time. Usually it does confirm. So say we entered the trade right around here, and for our stop loss, we want to look at the swing lows. So if we look at our 90-minute time frame, we have a swing low right here and a swing low right here. This is a big area. We also have 54K, which is, I believe this is a fib level. It's a big area as well. And I would set my stop loss below here. So this is below the swing low. Leave a little bit of leeway. I think this is a really good place. And the common place that you could look at to potentially take profits is 59. I don't like the risk reward ratio here.
Why is that common, 59?
Oh, 60K, because it's just that big
gotcha.
place that everybody loves. Yeah, that 60K place. You can do this trade. It's about a 1-to-1 risk reward ratio. You would have won it. That's the minimum risk reward ratio I do. But here, I would say it might have been a little bit better to go up a little bit higher and look at, so we don't have any spider line until right here. This would be above a 2-to-1. You still wouldn't have hit take profit. I think this is fine. I don't have a problem with entering this trade like this at all. But what we could also do is look at our market cipher SR, which could give us a few more points to potentially look at. That may give us a bit better risk reward ratio that we could have hit first take profit before already. So we don't have to be waiting in this trade if we were in this trade, it would have been over a week right now. This could have been one place. This is a 1.4-to-1 risk reward ratio. You'd have to win, about half of your trades, a little under half of your trades, I think, to be profitable with this. Or you could have went up to this place. See these dotted lines? These are SR points as well. Right here, this would have been a really good place. I like 62K right here. This is if I were to enter this trade back then. I didn't enter this exact one. I think I was long earlier, but this exact one right here would have been a perfect place, 1.77-to-1. that would have been a really good kind of intraday long that you swing trade intraday long. Yeah, it's pick your poison. Everybody kind of calls it a different thing a little bit. It's a little bit subjective what you want to call it there. But yeah, it played out in about a day. So that would have been great. The other thing too that you could have done where, let's say you had your first take profit up here, but you saw a giant wick up and then you're coming down. Yeah, it's not a dumb idea to, if you're watching it, lock in your profits here, set your stop loss to your entry point, on Bybit, set your stop loss to your entry point, maybe take half of it out, 70% of it out, and then let it ride up a bit more. And you'd still be in this trade. Right here. And what we could do, let's say you took this trade right now and you're looking to maybe enter a new trade. You're looking, like I mentioned right here, this could be a potential scalper day long. Let's say we want to take this scalper day long, but we're not extremely confident on it. So our entry point is going to be our entry point would have been right around this area right here. And we want to take this long, but we're not super confident about it, but we want to be in a trade. We want to have some fun right now. So we're looking at our lower time frames. The one thing that is good here is you have a bullish divergence right here. So this is what I was showing you on Solana. Your money flow, your momentum waves are coming up. Your money flow is not too good though. So this is a riskier play, but you do have the bullish divergence. And you may want to take, we're excited, we want to take this trade. What we could do is we could add to that trade we were in to kind of give us a risk-free trade. So our entry point was right here. If we doubled that current trade, that would probably bring our entry point up to around, and you'd want your stop loss to be below the swing low, which would be right around, 58.4. We could add to that trade to bring it up to around this area, and we could set our stop loss to our take profit. We would keep our stop loss at our entry point, our new average entry point, and this is how we would do it. So it'd be a risk-free trade. So if we get stopped, if price does this, we wouldn't really lose any money other than the fees, the Bybit fees, which would not be a lot, maybe $1, a couple dollars, depends on how big your trade is, but not too much. We'd still have a profitable trade from our trade before, but we'd add to it, and we could potentially, it would be no risk, essentially no risk, and a very high reward if we were to try to come up to this point. Now, when you look at where you're going to be taking profits for, a scalp trade, I always like to turn on the SR point, the market side for SR point. This dotted line changes. This white line is a good point to look at. It's called our VWAP. Now, this is not the worst risk-reward ratio. Trying to come back up to VWAP, I don't have a problem with this, especially for a riskier trade. If you're trying to take a trade like this, it may not be a bad idea. You could take in profits here, but really for a better risk-reward ratio, I would try to go close to a 3-to-1, 2.8-to-1 right here. These dotted lines would be better for that, this general area right here, and get that 3-to-1 risk-reward ratio. So you only have to win one out of these three trades. So essentially, you're risking, if you already had that winning trade, you're essentially risking, let's say, really just a small amount, a few dollars probably, depending on your funding fee, depending on how big the trade is, to essentially make a nice win right here, to make a nice return. And this could be higher leverage because you're on about 1% right here. So 1%, you could comfortably go 15 or 20x leverage to potentially try to do that trade, to potentially try to get into that trade right here. So that could be a higher leverage area. You still want to use your risk calculator right here, your risk calculator to try to enter this. Another thing I like to look at too before I'm going to enter this trade is I like to look at my ETH chart, because sometimes ETH could outperform Bitcoin and do a little better, and I like to compare them and see if I like something a little bit better on ETH.
You mean like a proxy play, like whatever Bitcoin does, ETH is going to go that direction more.
But sometimes ETH will do better, or sometimes ETH will be hitting a big point when Bitcoin's not, and vice versa. And sometimes Bitcoin will outperform ETH, it'll pump up more, things of that nature. And sometimes you can kind of estimate that based on whether or not we're like hitting a big place, or based on how things look on ETH versus Bitcoin. I mean, there's definitely times that I feel like people went long on ETH because, as you know, ETH has bled a lot against Bitcoin for the past year. There's times where people went long on ETH and didn't hit their first take profit, but if they took the same trade on Bitcoin, they would have hit their first take profit. Sometimes it's vice versa, but I generally like to look at least ETH to see, especially for a trade that I'm not so confident in on that, like that last one right there. So I'm looking at what's happening with ETH right here. You know, we're below the big point right there. We're hitting kind of our trend line, which I wouldn't consider to be as powerful because the trend line is more, you know, you could mess around with this, move it around. Oh, it should be here. Oh, it should be there. You know, I mean, it's more of an approximate thing, whereas the spider lines are more, you know, just straight ahead like that. So if I were to look here, um, yeah, nothing. Let's see. On our third, we want to be looking for, you know, potential bullish divergences under 30-minute and below. We don't see it on the 30-minute, but we do see, you know, we don't see it. Yeah, we're not seeing anything
And just to
too
be
big
clear,
here.
a bullish divergence, it means even though price is going down, these TA metrics are going up, or TA
Yes,
metrics are bullish, and that's the divergence.
exactly. That's the exact place of that. Let me just show you. Where was it? Yeah, right here was the example. So we had it actually. We have it on Bitcoin right here. Price is coming down, but your momentum waves are coming up. We ideally want to see money flow not be going from green to red, especially if we're looking along, but it's not always like an exact kind of science there. You still could easily, you know, win this trade. And I mean, this trade isn't a bad trade to take, especially if you're doing such a good risk reward ratio like this, because I think you would win this trade at least 1 out of 3 times, which is what you would need to be profitable. But if I was like, you know, already won some trades and I'm like kind of like, maybe wait a little bit and kind of see what happens. Now, the other thing we could look at a little bit is the 30-minute on ETH. So this confirmed a wave on the 30-minute. You could kind of compare it to some of the previous waves that we've confirmed, like right here, you know, this kind of area, see these waves below, and you did come up, you came down a little bit lower on that one. Same situation here. This was, let me just show you this example. This is perfect to look at. This is what ideally we'd want to see in this situation that we're not really seeing right now, is this is a bullish divergence because price is coming up on our 30-minute right here, and you have price coming down. And you had, this is what we want to see too, that wick, you had a sharp wick down, and then you shot up. That's what you want to see, and you want to hold that position. Now, we had a wick down after that. It happens sometimes, but it wasn't an issue because we had that wick over there. So if we were to enter this trade, you would have probably entered around here, and this was a pretty easy one because you'd set your stop loss below that wick right there, and the common sense area would be just go right here, almost a 3-to-1 risk reward ratio, right to this spider line. This would have been a beautiful, beautiful scalp long trade on Ethereum right there. That's like a textbook perfect area. You also want to look at, you know, a couple other things like your lower time frames. People would say, yeah. So people would say like, oh, why? Well, now you're saying, you said the money flow is, you know, not good. We shouldn't trade based on the money flow. Well, that's a 30-minute. It's a larger time frame. If we looked at the 15-minute at this time, let's see what the money flow is doing. That's good. That's what we want. See our money flow. It's coming up. That's exactly what we want in the 15 minutes. So you can just, I know some people ask, you know, can you trade just based on one time frame? Yes, but usually you need other metrics to have much more of a confidence here. These yellow X's too, when you're seeing a lot of yellow X's like this in a bunch as prices going down,
Who made those yellow
usually
X's?
what's that?
Like, who did you write those yellow X's in,
No,
or
no, no.
who?
These are part of market ciphers. So
Okay.
these are they could be manipulated. These typically mean somebody's dumping price. Like typically, it just means price is dumping, and it's not like going in a regular motion. It doesn't look like the healthiest dump. So it means somebody could be jumping price. There could be manipulation. You know, there a lot of things could be going on. Typically, when you see a lot of these, what happens is they start to price starts to come up. Now, you don't want to long every time you see this. You want to long if you see good things happening, money flow coming up, bullish divergences confirming, us hitting your level of a big level of spiral line, then you want to try to long with that. So that could be a big thing there. So that was like a perfect setup right there. This was the same long setup that I showed you kind of on Bitcoin there. This was a very similar setup on ETH. It's interesting. ETH has been a good coin to trade lately. It's really been respecting these points. That's why I try to, like some people, I would say at least look at Bitcoin and ETH. If you're a trader, try to look at both of those because ETH is a really good coin to trade. In terms of people ask about market cap, Solana is a big enough market cap where you could trade it pretty well. It's a good coin to trade. As you get, you know, out of the top 10 and lower, it does get more volatile and riskier. There's more kind of risk reward type thing. You could make more, but the volatility, they find ways to wick you out a little bit easier in some of those some of those smaller market caps. So especially for a beginner, Bitcoin and Ethereum should be your bread and butter. And we could look at, just to reiterate the same thing I was showing you guys with this. This one's very similar to the last scalp long over here. And this is more because, okay, so as we're seeing, again, bullish divergence and your money flows coming up right there, that was that wick down. This kind of caught that wick down, which it's almost like cheating. It feels like sometimes it's not going to work every single time, but look at that money flow coming up, that bullish divergence as money flow, as price is coming down, as we see right here. And then here would be our trade setup for this, very similar to the last one I just showed you. You'd enter around here, set your stop loss below the wick right there. And this is one where you could probably, I don't ever like to go above like a 3-to-1. This is one where, I mean, some people would go crazy. You would have been fine. I mean, a 4-to-1, you could have done that. But if you want to be a little bit more conservative with it, just do a 3-to-1. I would go like right here, 2.8-to-1, this area, be a little bit more conservative with it. But this is one of those trades, especially since you had that, oh, what happened here? You had that big drop down, that giant capitulation wick down, and then you regain this area. That's one of those where it's, strong possibility. Nothing goes down up and to the right forever. Nothing goes, down and to the right forever. So that's a big thing to look at there.
So right now in the market as we film, is it more, it could be nothing, but is it more in a ready for a long position or short position? What are these metrics telling you right now?
So not too much change since the kind of long that we looked at yesterday for the macro, for like a swing long. Not too much has changed. We're still seeing, as you can see, let me just clean up this a little bit. You could see the money flow coming up, which I really like here on the 5-hour. You have a trigger wave to the downside, but it doesn't mean much to me because you still have money flow coming up. You still have enough, good things kind of playing out. For the very, short term, it is if I had to do a trade right now, oh, this could be good too. This is especially for the kind of scalp today long situation. On your hourly, you're looking at the VWAP coming up right here. Your money flow is starting to come back right there. And we look at the last time, this happened. Look at right there. We shot up just like that. So that could be that situation where we could, try to long this up potentially. Now, I mean, it's not going to work every time. We could easily, just come up with this VWAP and then roll over, come up like this and then roll over. That's okay because we only have to win about, a little over 1 out of 3 trades to be profitable with this strategy. But I do think it's a good idea to potentially look at when this green dot comes up and confirms on the hourly. So in addition to that, what's 1/16th? Remember I was telling you about the 1/16th. What's 1/16th of the hourly? That's about the 3-minute. So let's look at the 3-minute. Oh, what's happening on the 3-minute? This is beautiful. Just like, it's kind of just like the swings trading stuff I was showing you. Good curvature, little trigger wave, and we have the money flow. This is where I think it's a good, I would enter this trade, and we could enter, let's go on the, I'll show you on the Bybit account. Let's enter this potential trade right here.
And as Evan teaches me how to trade, I will also be using Margex, the easiest entry point in crypto for beginners and advanced users. Use code Altcoin now and register to claim up to $10,000 in bonuses. Link down below to follow along.
Let's see what we want to do here. So that's about a 2-to-1 to that area. I would probably go right around there at 2.5, and we could also look at our
And
SR
why
points.
did you go there? Why is there a resistance, or why 2.5?
2.5. Okay, so anytime you see these wicks right here, so let's just look at these. Let's just look at what price has been doing. See right here. So we have a wick around this area, a wick around this area, a wick around this area. That's a place where price likes to reject from. We could even draw a horizontal line that coincides with both these wicks. So right around there, that's actually, a 2.2. This general area I think would be really big. And you could also look at some of the SR points on market side for, these are kind of based on the wicks. It's showing you this general
Makes
area
sense.
is a good place to look at. So we could enter this potential trade. And then going above this is called our VWAP, our dotted white line. This would get more bullish. If we could break above that 60K, that would get more bullish. I wouldn't, the way I trade, I would just, even if it rejects from that, I would probably just keep it in because I know a trade setup like this is going to win at least 1 out of 3, or at least A little over one of the three times that I needed to win. A little, probably that 40% that I needed to win to be profitable here. 30, a little, it would be because it's just below a 3-to-1 risk reward, or it's a 2-to-1 risk reward ratio. So that would be, I have it written down here actually, 2-to-1 risk reward ratio. You would need to win about 35 to 40% of your trades to be profitable, depending on what your, what your fees are. So what I could
Evan,
show you, yeah.
I love your passion, man. I feel like when I'm talking about to regular people, one about how to achieve on YouTube and just crypto,
Mhm.
like I get real passionate. Dude, you love trading, and that shows.
Yeah, yeah, I appreciate it, man. Yeah, I took, it kind of, when you do it a lot, it kind of becomes like riding a bike a little bit. Like I had to like I wanted to write down some stuff to like kind of explain too, because sometimes it just kind of becomes natural
I love
over
that.
time. So
And
yeah.
I'm learning a lot. Show me how to set this up on Bybit.
So yeah, let's go to Bybit. And this is from the previous, video that we recorded the other day. We have this trade in. It's down a little bit. It's down $70. We're risking about 150 bucks. So that's not an issue. And actually the exchange is paying us a little bit to keep this trade in because we have a negative funding rate right now. So
Why?
let's realize profit. So when you have a negative funding rate, that means more people are shorting the market than longing the market. So they'll pay you to long when more people are shorting and vice versa. Typically, because most people who are trading Bitcoin are bullish on Bitcoin long term, most of the time it's going to be more positive, but it's something to look at. Like, do not trade based on this, but I would say more often than not, when funding fees are negative, we do tend to come up because you look at the majority of people tend to get it wrong, sadly. But that's not always, don't, you just trying to trade on that, you will not make money, trust me. But it's one of the many things you could look at and mess around with here. So we have this one trade in. So if we were, so let's say we have one account, like I would recommend maybe making a second Bybit account or taking maybe the ETH scalp long as opposed to the Bitcoin scalp long. I would not be adding to a trade that's in the negative right now. So let's just look at ETH really quick and see if we could do the same trade potentially on ETH. Let's see if the same things are there that could give us that potential way to look at ETH. And I switch between Heikin-Ashi and regular candles. When you're scalp trading, it could be advantageous to look at regular candles because it's showing you exactly where price is. It's going to be less smooth, but it's showing you where price is. So right now in ETH, we have the same kind of setup right here. I kind of would like to see us break kind of back above that level on ETH, similar to, well, we haven't done it on Bitcoin yet. So it's really the same thing. Yeah, I would say it's the same thing. So how about let's do it on ETH and let's see if we could. So I think it's the same risk to do it on ETH. I think they're generally going to follow right now because you're still below the line. So this is a little bit, the only thing that I don't like here is that you're below the line, the spiral line right here, but I don't think it's the worst thing to do. And I think this trade, especially if we can get the hourly to come up a little bit more based on how things are looking, I think this trade will at least win the percentage we need it to win to be profitable over time with this setup. So if we look here, this would be the high point to take profits. I think that's too high. I would go to around the 2.1 that we were looking at on Bitcoin, just like that would be good. So let's type in those numbers. So let's see our stop loss percentage is 1.1%. So let's type that number in over on market cipher right here. So we got to go to our stop loss percentage, 1.1%. And we want to, our total capital is still around 15K, position size 3,000, 20% of the account. And, the question here is how much do we want to risk on this trade? 1% is a standard number that we want to risk. That's what we risked in the last one yesterday. For a beginner, I think that's a great area. If you're a little bit more nervous about this trade, but you're trying to get in the trade, maybe just risk $100.
But
Um,
we're intermediates now. Like the
yeah,
first
we're
video was
intermediates. So
beginners.
yeah, how
So
about we
what?
do it a little bit higher? Let's do it a little bit higher leverage just to show you. If you're, yeah, so you could go around 9, 10x leverage. It's going to tell you it's a little bit riskier. This is a conservative calculator. I don't think it's like that risky, but let's do 2% of the account, which could be
Question.
a little bit more risky. Go ahead.
I heard a trader say once the point of leverage is to like de-risk. So you don't have that much money in the trade, but obviously leverage is very risky. What is the point of leverage?
Leverage is to basically borrow some funds to get a higher kind of return with risking not that much money because you have your kind of stop loss there.
I get
Um,
that. I get what it is, but like the point is you don't want to risk too much money. You don't want that much money in the trade. So it is to de-risk you. or no?
Yeah, to a certain extent. I mean, I think I wouldn't agree exactly to de-risk you. I would say it's more of a convenience factor because if I'm not using any leverage and I have my account that's 15K, I can only be in one or two trades at the same time, theoretically, but I could do more this way. And if I'm doing different kind of positions here so that the exchange, the funding fees could help me too and other things. But yeah, it is a good question. I mean, to answer that, I mean, you could go on Coinbase, or you could just buy on spot and try to do these trades like that. But the leverage factor could kind of help you with fees a little bit because you're not going to be you're usually going to be getting a better exchange rate, especially if you're limiting into these trades, but it's going to give you basically more leeway. Like I wouldn't agree with the factor that doesn't like de-risk you because if you're not using it correctly, you can lose more money. But with the stop loss, yeah, that's a really good question. I've never actually heard anybody say about the de-risk part, but I would say it's a tool to have more power here, just a lot more power without risking too much. Because if you could put on that higher leverage, you can get, like, let's say we do 10x leverage here and we're doing a 27K position. We don't have 27K in the account. So it would take longer to make those gains. We're making those gains quicker and we're only going to risk about $200 or $300 for this particular trade. Does that make sense?
Yeah, that makes total sense.
That's a really good question about that. I think whoever said that is right, but I've never thought about it that
I
way.
was listening to Tone
Yeah.
Vase back in maybe like 2020. And he
Yeah.
was talking about, 3x, 5x, not 100x leverage, but the smaller X's.
Yeah. Yeah. All of them are set. You just want, the most important thing with leverage is you want your liquidation point. You don't want to get liquidated. So you want your liquidation point. If you go too high of leverage, like if you have a stop loss at, let's say 5%, if you're going above 20x leverage, you're going to get liquidated before the stop loss. So that wouldn't make sense. That's the most important thing here. If you use a risk calculator, it's going to tell you, it's going to tell you what's going to happen if you were to, it's going to tell you not to do that amount. So that's why you should always use a risk management calculator.
Let's do the trade.
Yeah, let's do a trade. So we got 27K on 9x leverage. If it's 9x leverage, usually I would just just round it up to 10, make it simple.
What do you averagely use? Like you personally, are you using, what's your average?
For a trade like this, 15 to 20x would be a little bit, but I don't want to, for somebody starting out, I wouldn't recommend, yeah. 15 to 20x, up to 30x. I've done really high stuff just to mess around with, 100x. I've done that $1 million trade just to mess around, with a tight stop loss. There's fun in that. Sometimes you can make a lot, that's a little bit more on the gambling side a little bit. So, yeah. So what we're going to do here is for a scalp trade, I mean, I'll probably just market into this because, sometimes price could move quickly here. And for the sake of the video, I want to just get it in. And we're going to limit out, though, to save on fees. So if we look here, we're on 10x and we're going to look, the percentage of our account is going to be, so it's a value of 31K. So we want our value to be at 27K. So let's go to 10. That's about 26K. We could go 10.3, 27K right there. So that'd be perfect. We're going to go buy long right there. And there's our trade right there. Show all positions. We could see the Bitcoin trade before. And most important thing you want to do is set your stop loss right here. Our stop loss is going to be at 26.28. So we're going to type that in. And that's about a 250. Okay, 250. So that's not too bad. And that's what we want right there. And we're already, see the volatility of price here. We're already $8 in profit, which isn't bad. Paid a $9 fee. It would be less if you limited in.
It's that easy. $8 in profit.
Yeah, just flip a coin. That's funny too, because there have been people that have done experiments where they just flip a coin, whether to go long and short, and they use good risk management. They tend to either lose about 2% a month or gain about 2% a month or break even. So even if you have no clue what you're doing and you just use good risk management, flip a coin, long or short, set size stops, you could potentially be a break even trader.
Wow. So what are our take profit and what are all the things we're setting up?
So we just set our stop loss. We typed that in. We're going to set our take profit, which is going to be at 27.24. I like to do it below the even numbers because if people could try to be selling at 27.24. It's superstition, but I like to do that. 27.24 I like to set. So we're gonna type that in here, 2724, and we're gonna take out, I wanna take out about 70%. So it's easy here. You see our quantity is 10. So for the quantity, just put 7, that's about 70%. Post only and reduce only. Like I mentioned in the last video, we wanna have reduce only here, which is gonna be really important. And we're gonna go sell short because we went long. So to get out, we're gonna be selling those contracts that we bought, those contracts that we borrowed. We got our stop loss right here. So again, if we can win this type of trade, at least, 40% of the time we'll be profitable. Will it play out? I hope so. We're coming down a little bit right now.
And how
The
long do you
only
wait?
yeah.
Like you would
What's that?
wait days for this, or assuming it doesn't hit the stop loss or anything or take profits, how long would you wait? Forever?
How long would I wait? As long as it takes. It could take, I mean, it would be unlikely that this takes more than a few days to give us an answer. It'd be very unlikely that that happens, but it can take a while. I would look at, if it's not doing anything for a few days, say we just, came up to here or something, days are going by and I'm getting bored, maybe I'd take some lock in some profits, maybe not. I usually like to keep it in. I usually like to, wait and see what happens, depending on how things look. I would say for a trade like this, we'll find out if this is going to get stopped out within an hour, probably within an hour or two. We'll find out. So,
Evan, in our final 7 minutes, what can should we wrap up? Can you show us more advanced stuff? How we ending this?
so final 7 minutes. I think we went over a lot of the main stuff for the scalp trading, what I look at. All the main concepts were there. I would say if you're trying to get into more advanced, watch this slowly, pause it, and try to find, the places I looked at. An example of a few other things, like just another thing, I'll show you one other thing I liked on the charts. This could be risky. It's a smaller market cap. Crypto.com, I've liked a lot of, or CRO coin, Crypto.com coin. This could be a good trade right here. Look at your money flow coming up. You have your tiny little tight trigger wave and your 8 hour, a lot of basic strategy stuff right here. I'm just looking objectively on all of these. This is more of like a day to swing trade, but came down a little bit. Price does tend to come to, it's not going to go straight up. This could be an opportunity to try to give a lower risk, high reward long a shot. So I'm going to go to regular candles just to pinpoint exactly where price is right now. And this setup could be probably below here would be a good idea. And then the wick right there. So it's a 2-to-1 right there. I mean, I would probably, for the stop loss, here would be good. These wicks I don't really have a problem with. If we go that low, I think you're probably going to get stopped out no matter what. This area would be good. That's a 2-to-1, potentially 2-to-5 right there. It would have been a little, I was looking at this yesterday before we started to pump up, but yeah, 2.7 right there. That could be a good one. That's kind of what we look at, try to find those trades with good risk management. That's the main thing I would, say to kind of wrap it up. Yeah, I mean, to reiterate, like the most important things, don't get discouraged if this one trade, get stopped out. We got to look at this, objectively. We got to win about 40% of these, to be profitable. So that's all we need. You don't need to know what's going to happen to make money. That's the most important part of this. You just need a strategy that will work the percentage of time that you need over time. Be patient with it. It's a marathon, not a sprint. Think of it as a specialized skill. People go to school for many years to get a job that pays, 150K to 200K a year. It's going to be unlikely that you're going to be able to make that with trading, with just a few months of experience or just a few weeks of experience. Think of it as a skill that you're learning over time. And yeah, I mean, remember to breathe positivity, the words, everybody kind of they get in their head because, the biggest thing when you enter a trade, I would say, is don't be staring at it like watching paint dry. Just wait, give it that time, wait to see what happens. And if it gets stopped out, that's the trader mindset. That's a lot easier to explain, but a lot harder to get into. If it gets stopped out, you just got to look for the next thing. And, people get nervous, the professional athletes, they'll do really great in practice, but when you get the camera on you and everything, when there's real money involved, it could get, you tend to make stupid mistakes that you wouldn't normally make. So I think that's pretty much the main things I wanted to explain to you. I mean, we went over the more simpler day longs, and then we went over the scalp longs. That's pretty much the main things that I use, the most things I use. I mean, there's a few other more advanced things that, me or Crypto Face or a lot of the other markets.
Give me one more. Give me one more advanced thing.
One more, a little advanced
expert
thing.
level.
Okay, let's see. So something you could look at for confluence that I like sometimes is gapped RSIs. And let's see if we could find an example of that. Doesn't happen too often. Oh, this could be good. Let's show this scalp short. So this was a good short that I took on Ethereum, especially like right here. And let's zoom in. Let's just put the place right here. I don't know if there was an actual gapped RSI example here, but okay, yeah. So this would be more advanced. You're
I
in a
know
downtrend,
RSI, but what is gapped RSI?
right like this. Okay, this would have been a perfect, yeah. This is just, look right here, look right here. These are gapped RSI right here. It wasn't right there, so that wouldn't have been a place where it was still worked out, but that wouldn't have been a place. Right there and right there. Confluence, gapped RSI plus this kind of trigger wave going downward. This is actually a, okay, not a bearish divergence, but you have the gapped RSI. This could be something where you're trying to, yeah, see how that's gapped apart from there. That's a more bearish sign, especially like on the 15-minute and above, 15-minute to hourly for kind of scalping, more of a bearish sign. You could see the opposite example of it. A little bit right here brought you up, but I like to see, I think it was on Bitcoin somewhere. It's not the most common thing that happens. Let me see if I can find it. I thought we were
But when
seeing
you
it
see
somewhere.
it, you're salivating as a trader. You know this is a good one.
It's one of the many things. It doesn't come up too often, but it's one of the many things. Like, let me show you macro. We could, oh, it's a good example of macro right here. This for macro for trend direction. Look at these gapped RSIs combined. See how gapped this is? Nice correction. Same thing right here. Same thing right here. Gapped RSIs, nice correction downward. It doesn't happen very often. The last time we saw it happen was last year on our larger time frames. Yeah, it's something that doesn't. Here's an example of the bullish, more of the bullish situation here. Look at how gapped these are. They're more gapped right to that point. You know, see right there, more gapped, and you're seeing your money flow coming up. That led us to a lot of this relief rally. So for swing longs, that could be another thing of the many things to look at. So yeah.
Evan, flip the camera just back on us if you would.
Okay. Yeah. Let's see. Oh, perfect.
Dude, I want to thank you for sharing your time. I will be going back and pausing some of this and going back through these things. Just, as I continue my journey as a basic level trader. What's your subscriber number roughly on YouTube right now?
We're at, I think I'm just under 15K, 14.3K, I think, about there.
There is no reason the altcoin daily army can't get that above 16K. It's linked down below. Everybody check out Evan's channel. He put out great perspective. But thank you, man.
Yeah, really appreciate it. Yeah, it's an honor to be on. Thank you so much, man. Really appreciate it. It's awesome.